Spain's property market has been booming over the past few years, and there are many people who want to get in on the action and invest. But before you invest in Spain, it's important to know what you're getting into, what you're dealing with, and the specifics of the local market. Joining me in this video is Erwin from MyBlueBricks, a property company based in Valencia, and we're going to talk about all the things that you need to know, as well as give an overview of the Spanish property market in 2026. So I hope you enjoy this discussion, guys. Let's get right into it. All right, Erwin, welcome to Millennials with Money. Good to have you on the channel.
Thanks, good to be here. Yeah, I've been hearing some good things about you and I was checking you out, so I'm happy to be here.
Yeah, thank you. Yeah, I followed you and MyBlueBricks for a while, so seeing where you are today versus, a few years ago when it was very much, a lot of videos on Instagram of your projects, and then seeing what you've done is really incredible, so well done.
Yeah, we've been changing to more lifestyle content to make it more open to attract to a bigger public. Because what we were seeing is we were just doing the videos of the renovations, and sometimes, it is not the most sexy thing to see always. And we do, in the end, you need the renovation, but in the end, some really cool things come out of it. And yeah, we do focus a little bit more on that now lately.
Yeah, definitely. Yeah, I understand where you're going, but I have to say, sometimes like the before and after and kind of the project you're on, really, really impressive what you've done.
Yeah.
Great. So we're going to be talking about the property market in Spain for investors in this episode. But before we get into that, why don't you tell us a little bit about yourself and about MyBlueBricks, your company?
Yeah, so I'm not Spanish myself. I'm Dutch. I came to Spain 10 years ago to do traineeship in a big IT company. And within these 2 years, the idea was to go home within 2 years. And in these 2 years, I met my business partner. That is still my business partner today within MyBlueBricks. And before that, actually, was a book that I read, which is called Rich Dad, Poor Dad, which many people most likely know. And most likely they already have been reading. But to me, it made such a big impact, a really big impact. Maybe it was just also the right moment and everything that fell together. But I really couldn't think different or the same anymore after reading that book. So that brought me to some other forums. And I met then my today business partner. And he was already doing some real estate projects. I did it together with him. He invited me to do it together with him. And since then, everything started. So that's also the start of MyBlueBricks. He started around 9.5 years ago with just a project for ourselves, seeing how it worked. And after seeing that it was really working, right? So you read a lot of things about it. So people most likely listen also to you, what you're explaining. But then when you get started, when you get into it, then you really see the power. And that's what I saw at that moment. And we've been growing ever since. So we were first doing the projects for ourselves. But as our cash ran out, we were collaborating with other people that were interested in doing a project together with us. So it was first one project, then another one. Then we did a couple of apartments at the same time. We did buildings. The last 2 years, we've been doing a lot of transformations. So the change of use project. So we buy, for example, huge garages or offices or whatever. The most difficult projects, let's say, or the most complex projects that a lot of people are getting a little bit nervous from is that is what we then do, and we turn them around into properties. Properties for residential and also for tourist licenses. Actually, whatever we can get our hands on. Now, lately we've been also growing and scaling. And we're now doing bigger size projects, and we're doing two things. We're focusing on investment projects. So these are the investment units. These are the units that you would like to have to rent out for a good yield. So that means that the rental income you can get out of it. And the other product is the first and second residences. So that's a very different product that is more luxurious, that is more for people to live in or having their second residence for example, the UK or from Holland to come over and spend here some time. So these are two different brackets, and that is what we're now lately focusing on. And what we do a lot is we try to explain just our experience from the last years, because it's quite overwhelming a lot of times, real estate, and people use a lot of fancy words, and we try to go against it and just, make it transparent, make it easy for people to get into it.
Yeah, that's great. Yeah, and you mentioned, people from the UK, from the Netherlands, for example. Is this your primary like investor group that are working with you? Because I see obviously your main website, which we'll link in the video description. That's primarily in English. So do you get many Spanish investors or Spain-based investors, or is it primarily foreigners and people living abroad who are looking to invest in Spain?
Yeah, so you know what? Our expertise was always international people, international clients that were, for example, coming over. They don't have any experience in real estate in Spain so far, or maybe they have some experience in their home country, but they want to come over and they don't know not only how real estate works, but also the local ways of dealing with people here, or with culture, or the language, which is difficult for them. Now, lately, with also going towards these first and second residencies, we have been also dealing with a lot of local clients. We've always been also in contact with local clients, and that's for sure also one of our, because I'm the international part of the team of MyBlueBricks, and besides that, all of them are Spanish. So yes, we have also a big network from here, but our expertise was to get international people to do a project together with us, or that we help them with their projects. But it's been changing a little bit, because also here in Spain, as you most likely know, there's a big demand for new housing, and there's a big shortage, and that shortage will be there in the upcoming years, and it will only increase. So also for the local market, we're seeing that there's quite some movement, some traction that we're now also focusing on.
Yeah, these are all things that we're going to come to as this video goes on, but good to put it out there up front so people know what to expect. All right, let's maybe get into the market then, Erwin. So in terms of the Spanish property market in 2026, how is it looking from an overall perspective? You obviously mentioned about demand for new housing, the shortage. That's obviously having a big impact on the property market, and particularly in high demand areas like Madrid, Barcelona, Valencia, Malaga, Mallorca, for example. What's your take?
So to be honest, it has been quite a challenging last 2 years. And that is regarding the local market, but also what kind of is being spread in the news and articles about Spain in general as a company, as a country. So there's been a lot of criticism towards the tourism of Spain. And to be honest, it's been used in favor of politic parties to also gain some votes. So you have a lot of articles that have been published about that there's too much tourism, that because of the tourism, the house prices have been increasing. Or for example, also in Barcelona, as you most likely also know, is that they now want to move forward to ban from 2028 or 2029 out of my head the tourist department. So they already have been granted a license. They want to just get them out, all of them. Now, there's still a court case, also a higher court case going against it. So let's see what will happen. But that is a little bit the trend that we have been noticing for the last 2 years. And with that, it has an influence on everyone who is doing things regarding real estate, but also tourist-related activities in Spain. Now, at the same moment when I'm saying the beginning of this year, we've been also noticing that has been changing a little bit, and that negative sentiment is going towards more neutral, because in the end we also need to be, or the Spanish government needs to be honest, is that they cannot do without tourism. If you look at the GDP of Spain, the biggest income industry is tourism. So they were playing with fire, and they also know that they have a lot of credit, that still people are coming. For example, last year was the record of the amount of people coming over and the amount of money that they're spending. So they know that they have some margin also to play there with, but they also need to watch out. So that is more towards then the tourism. So we see that now, kind of calming down a little bit, which is then better for everyone's sake, especially if you are also renting out, for example, because we are also renting out our portfolio in Barcelona to students, to expats, to digital nomads, and everyone is reading these articles. So that's a good sign. We're seeing that there's good movement in the market, and at the same moment, Spain is doing very good in terms of the economy, and also if you compare it with the economies, the whole of the EU. So they're doing good as a country. They have been suffering a lot from the housing crisis, and they are now doing well. Again, a lot of time based on tourism, but they're doing well. So that's a good sign. and which also see it's quite healthy because of the housing crisis. They've been lowering the amount of money that you can get from a mortgage via banks. So if you now buy a mortgage, for example, in Spain, you can get as a resident 80%, as a non-resident you get 70%. So there's still kind of, you need to put some money down. And so there's a very healthy situation, which before the housing crisis, you were just getting 100% mortgages. And if you wanted to mortgage or get another loan on buying a car or whatsoever, you can include that. So in general, I think Spain is in a very good situation, and I think 2026 will be a very good year in terms of real estate and also the opportunities, because the government now is realizing that they need housing, so they can also better collaborate with a lot of people instead of going against them. So that's positive.
Yeah, that was very nicely summarized. Yeah, and it's also, like you said, when it comes to kind of the tourist sector of the market, it can be a bit of a touchy subject and controversial for some people. But I think looking at it in isolation, like you said, is it doesn't give you the full picture, and it's not necessarily telling the whole story in that perspective. But
It's not.
yes,
It's not because, and it's good that what they have been doing, because it needs to be a balance. I completely understand it because there has been a lot of tourism, and when there is a lot of tourism, you also need to find the balance with, for example, the local community. So I completely understand, and it can also be too much. So what they have been doing now the last 2 years, that they have been trying to regulate the situation. So they have been more constructively looking at the numbers and analyzing situation to be thinking what they can do better. And that is now, for example, what we are a lot in Valencia is also taking place, because they're now coming back to a lot of kind of the show politics and going against it. They're now coming with constructive solutions. And it's very good because of the local community needs to live well in peace with the tourism.
yeah, totally. So with all of that, would you say that Spain is overall a good long-term place to invest in properties? And do you think there are any major risks or challenges that investors face here? Or even with what's been going on, people have talked about, perhaps bubbles in cities like Madrid and Barcelona. How do you see that from your side?
So prices are higher than they have been in the last years. Yeah. So the square meter price or the price per apartment has been rising. But it's not only in Spain, that has just been the global economy, where in most countries, and for example also the Netherlands, where I compare ourselves with a lot of times, and also the US, especially in the Netherlands, the prices have been rising way harder or way faster. So in that situation, yes, the prices have been rising, but there's still quite some space and like a healthy margin to go up, or at least that we're not completely creating a bubble. And it also has to do with then the mortgage criteria or conditions where they give. So you also need to down pay quite a lot of money to get a mortgage. So I think that in the upcoming years, with the macroeconomic situation in Spain, but also worldwide, that we still see an increase that will happen in the upcoming years. Prices are rising, but that will continue for some time. Now, you also always need to, of course, do good due diligence when you do a project. So, for example, if you're doing it for the value appreciation, if you're doing it for as a rental property, you're looking at the rental yield. But in general, the conditions in Spain are positive.
Okay, yeah, good. I think, that's definitely a trend that's been observed over the past few years. Prices have gone up quite significantly, particularly in the big cities. But very good that you mentioned that that's not unique to Spain, and that we're seeing it all across Western, Eastern Europe, North America as well. So it's a global trend in terms of house pricing.
Yeah, so it's always good to And it's always good to have a look and the complete situation, also what you're doing it, what you're doing it for. So, for example, as we always talk with our clients is, are you doing it? Are you buying it for yourself, or do you? Is it a property that you would like to rent out? And both these directions also bring different things to have in mind. As for example, yes, the square meter price is higher in a big city like Madrid, where you're living, or Barcelona, where I'm living. But you have also some other places where the square meter prices are not that high yet. Yes, they're increasing. But for example, in Valencia, where the square meter price is a half as Madrid and Barcelona. So that doesn't mean that the square meter price is just very low there and you should invest there without thinking about it, because you also need to look at what the evolution is of the prices, because it's always been lower in a city as Valencia. But if you search for these sweet spots, you have still a lot of opportunities to go towards.
Yeah, exactly. What do you think are some of the biggest mistakes that investors make when they come to investing in Spanish property? The common pitfalls that you maybe see or have seen?
Yeah, so what we are seeing with a lot of international clients is that, for example, those that don't have experience with real estate in their home country already, they really then depend on a partner like us to help them in a project. But those that have experience, or even have a lot of experience, we just had a client now recently that bought a building in the neighborhood close to the beach in Valencia. They bought it straight, and they wanted to do a specific project. But after buying it, they were just realizing that it was a protected building. And so they were a little bit not knowing what they wanted to do with it, because a protected building here in Spain means that there's more criteria for you to obtain a license to do what you want to do. So, but we see that a lot. So a lot of them, or a lot of those people that do already have experience in their home country, they think that it's also easy because of their experience in their home country to do it in Spain. And that's something that you shouldn't underestimate, because there's just different rules of working with, from the beginning until the end. Think about requesting a license, thinking about the construction work, thinking about the materials that we use here, but mainly also thinking about and underestimating what the impact is of a culture, and understanding also the culture. Because people do always say that things go a little bit slower in Spain, and maybe sometimes it is like that, but what we are just seeing is they have different ways of working and also different ways of communicating. So if you then come here and you want to do it in the way how you've been doing it in your home country, you see that people burn a lot their hands. So a lot of times what they then come towards us to ask for a second opinion. And then we help them along the way. If they want to have help with architecture, if they want to have help with the construction or the license or whatever, we can then jump in and have a look at the situation.
Yeah, you almost, it's kind of beneficial in your sense if you haven't invested in your home country, because naturally you go towards a partner like yourselves to get help. Whereas if you do have experience in your home country, you maybe are inclined to go and do it yourself. But as you say, you maybe not familiar with the local environment, how things are working, and that can be a challenge in itself.
Yeah, it can really. You can lose a lot of money with that, because and especially also just now. I'm now talking about people that have experience in their home country, but the same. Some people that don't have experience in their home country, or they just, or maybe they already. That's also a common one. They already bought their property for themselves to live in. So that means that they have the experience to buy a flip project. Flipping means buying and after selling it. A complex flipping project, a complete total renovation. And because they already bought a property for themselves, they also know how to manage a complete renovation project. So that's also not the case. Very difficult. So because if you don't know how that is working, for example, also the construction works, but also how to work with contractors, you can lose quite some money with it. And by the way, I had that as well, especially in the beginning when we were starting. I even did a project once that we didn't sign a contract with a contractor. And that is something that really you shouldn't ever do, because I lost quite some money there. But it's also just, the motivation that you have in the beginning. And by making mistakes, you learn. but better also to work with a partner that can help you. And even, for example, you can do a first project with a partner, a second project with a partner, and then by seeing what they're doing the third time, maybe you can then do it yourself.
Yeah. Yeah, and I think even beyond like, the local landscape and how things are done, there's also a mindset aspect that comes into it as well. You mentioned people who have a property in their home country, but it might be their primary residence because of course, the buyer for as a use asset versus an investor, the mindset is completely different and you may need a partner to open your eyes to that and to help you focus on what is really important for you as an investor versus what would be important if you were living in the property.
100%.
Yeah. So, Erwin, we talked briefly about mortgages for residents, non-residents, and how that's changed over the years. How is that these days? Because obviously you mentioned residents is typically 20% down, non-residents maybe 30% down. If you've got someone who is a resident, there's maybe some local initiatives as well if they're a younger buyer or investor. Maybe not investor, but yeah. So how is that working overall and how do property purchase costs come into that?
Yeah, so next then needing to pay money down, which with normal residential properties, if it's your first apartment, being a resident here, it's 80%. From your second to your third, fourth, they're usually also somewhere between 70 and 80% being able to give you the loan to value or that is the percentage of the taxation of a property. And by the way, if you buy a tourist property, they normally give you less percentage of a mortgage because normally they see it as a more high risk or riskier investment or product. Property, and they will give you between 50 and 60%. So also to have that in mind. But then, so you have, that is a down payment, but there everything starts. If you buy a new development project, well, then you don't need to do any renovation. You only need to buy furniture. But normally what we say is, okay, you have 20, let's say you are, or let's say for your public, most likely they're internationally. So you would need to pay 30% down of a property that is 100K, let's say. So that is already 30K that you would need to pay as a down payment. Then in normal situations, in Madrid that's different, but in Barcelona and most other provinces in Spain, you have to pay 10% of purchase tax. That is ITP, it's called ITP in Spain. If it's a newly developed property, it's not ITP, but it's VAT. Let's leave that aside for the moment. So the 30K plus 10K, which is 10%. But then you also need to do a potential renovation if it's a second-hand property. So that's easily already around 25K. Then there's some furniture involved. Then there's also some notary costs, register cost. Normally for the notary and the register cost, we calculate grossly 1.5%. So you already see 30,000, 10,000, 20,000 of a renovation, furniture, let's say also around 10. So you will easily come between, it will accumulate to around 70 to 80,000, which is, also quite an amount that you would need to have in mind when buying a property. And the more you can then also collaborate with people that can help you with getting the right mortgage, as for example, the mortgage brokers, you can also bump up sometimes the loan to value or the amount that you can then get as a mortgage. But you need to have in mind to have that amount ready to be investing in a property in Spain. Now, I was talking about a property of 100K. So that in some situations you can still get it in the smaller towns. But normally that is already on the lower side. But if you then also go outside of Barcelona and Madrid, where you are more familiar, where properties of 100, of 200 is already very difficult to get, in other cities, like the second or third tier cities, like for example, Sevilla, Malaga, Valencia, Alicante, Bilbao, you can still find that properties. So we have been developing some properties that are being sold below 200K. And that is then also the magic or the power of Spain. Because if you're listening to this and you're living in wherever in Europe and you hear these prices, or for example in Holland or the UK, you think like it's a joke. Because the same property, it will be at least double, or if not more than double the price. So for a lot of people that earn their euro or whatever money in whichever country, you can use it easier and faster in a property in Spain than you could do in your home country, and that is the beauty of, a lot of times of Spain.
Yeah, and I think in some of those second or third tier cities as well, the rental yields can potentially be a bit better than in the likes of Madrid and Barcelona. And another thing is that if you're wanting to take on multiple projects, this is not like there's limits and up to how much you can leverage yourself to get into things. So you also have to think about that if you want to do multiple projects. It's not just kind of like a free for all where you could go and just take out so many loans and mortgages to finance all your projects. There's a lot of due diligence and income checks that go on when it comes to getting finance for a project. So that's something probably people need to keep in mind as well.
100%. And I've been talking about that quite a lot, because your first opportunity that you can get is most likely the best opportunity, also the best conditions that you will get also from a bank to buy a property. So what is the common way of starting out with a property, your first two properties, especially the first property, is that you buy something as your first residency where you live in with your partner, and you put all your saved up money into that property to buy it, to renovate it, to make it the best, make it look like the best property ever, because you need to live it for the upcoming year. So I think completely different. I think like you were thinking, because the first few opportunities that you will get to then buy something is what I have been doing, is that I buy investment properties. I buy properties to rent out because I can get the best conditions on these first properties. And so I try to then save up all my money I've been putting into these properties and then rent them out, because with the rental, I can then earn next to my salary or dividends that I'm getting. I can then reinvest it in another property, or I can then talk again with the bank and say, hey, this is my salary, these are my dividends, but I also have the rental income, which, by the way, in Spain, banks look at all these three together and combine that as the amount that they are willing to give you a mortgage on. And then you can kind of again then buy a property. It's true, you would need to have the capital again to pay the down payment in a second property, but with the extra cash that you've been receiving from the rental property, it's easier possible to then buy a new property. And then, so the first few ones, and it is not only the amount of money that you receive, because I think it's also a very important matter and topic in what you are talking about a lot, is the being more independent with the amount of money that you're receiving from the investment that you're doing, right? So you earn more money, you can then buy a new property, and if you have been buying a small portfolio where you're earning some rental from, you can then buy new properties, or at one point then buy your first residency to live in yourself or with your partner, because you will just have better conditions. And so it's kind of the way of doing it backwards, like many people are doing, or what is right in the books to do.
Yeah, that was nicely explained. Yeah, going the opposite way. So as an investor, there's a couple of ways you can earn a return on your investment. One being through capital appreciation of the value of the property, one being through cash flowing from rental income, or maybe you've got a mix of both. Do you think there's particular areas of the country where certain strategies are better or produce better results, would you say?
Yeah. So that is then, for example, again, you have the two biggest cities of Spain where actually the most things are happening, Madrid and Barcelona. The square meter price are the highest there. So then when you're talking about investing in these two bigger cities, you're talking about a lower rental yield that you can get. And how's the rental yield calculated? You look at the yearly rent and you divide it by the purchase price, or sometimes also the total project cost, because you also need to invest again in a renovation. So let's say you have €1,000 rent per month. You do that times 12, and the purchase price was 100,000. Just make it as simple as possible. Then your rental yield will be 12%. Now for us, normally a good rental yield is starting at around 10%. And it's gross. So you still need to take out cost, but the cost also depends on how you structure also your property to rent it out, how efficient you are and stuff like that. Now going to other places next to the bigger cities, you can buy it in again, like I've been saying. So I'm referring a lot to Valencia, as we know Valencia quite well, but this is applying in every other city where the square meter prices are lower. So that means that you don't, so the rental yield in general is higher in these cities because, well, the prices of properties are just lower. And it doesn't mean that if you have a lower price of a property that the rent is also equally lower. No, the rent also maintains normally a certain price. So that is why normally I'm just saying that in a bigger city like Barcelona or Madrid, you can invest, or basically you can invest everywhere in a good way, but you just need to know how to do it. So in these two bigger cities, I would go for more creative ways of renting out your property. That could be tourist rentals if you can still get a license. That could be flex living or the co-living, or that you rent out rooms that we've been doing quite a lot. Or what you can also look at then in the bigger cities, which is more stronger there, is the cap or the value appreciation of your property. So that means every year the value of a property is rising. So that means that if at one point you want to sell, you can sell with quite a significant profit, right? But the real sweet spot is to find a mix of both, right? Because normally what I'm saying is with most of our clients, it's about also being more independent towards the job that they're working on or whatever. Because if you can replace your salary with the rental income, you can either work less and spend more time in, for example, getting another property, or spend more time in what you like to do, or spend more time in being with your family. But normally what we are talking about there is that you try to find a sweet spot between the two. So that is, you buy property and there's immediately good cash flow, and good cash flow leads to good rental yield. But at the same moment, look at where you can also get value appreciation and over the upcoming time, which is also in these other cities. In the whole of Spain, the prices of properties are rising between 5 and 10%. So normally in a city which is where there's a good amount of traffic happening, or where there's a good amount of people going towards, it can also be Malaga or Sevilla or Valencia, even the smaller cities like Alicante. But try to find a sweet spot. And it also depends on your strategy. Are you doing it for direct cash flow, or are you doing it for value appreciation? But normally what we try to push is then having a mix of both.
Yeah, and maybe another part that comes into that, which is not directly related to what you were saying, but I think is worth keeping in mind as well, is that in cities like Madrid and Barcelona, because of the high demand for properties, you probably have a much higher occupancy rate than you would in some of the smaller cities as well. Granted, you've got the higher yield, so that's a trade-off that you might want to keep in mind and
True,
when
100%.
making these decisions too.
Yeah, or doing maybe flipping, that you buy properties that need a renovation. So if you can find them for a good price, you almost know certainly what a decent, you don't need to put the nicest renovation, but what a decent renovation, you can also sell it for a good profit. That's also what a lot of people are doing in the bigger cities, yeah. Whereas in the smaller cities, you need to watch out with that a little bit, because you never know if there's enough demand for your property in a smaller city. As these smaller cities have very specific rules, the non-written rules, kind of, that one street could be high in demand than the other ones. We have had that a couple of times before. For example, in Terrassa, it's actually a city outside of Barcelona, 200,000 people, so it's not a small city. And we just bought something there, and it was a nicely property, completely renovated, but it was still a little bit more difficult. So you need to know very much what you're doing. Yeah.
Yeah, good to keep in mind. All right, so we talked a bit about kind of expected yields, different methods of getting a return on your investment. When it comes to longer term rentals versus shorter term rentals, what are some of the considerations that people need to keep in mind? Because it's two very different models of renting out as well, and they both have very different implications. You've also got this kind of medium term rentals as well, which have become a lot more popular in the past few years. So how do these come into play for investors?
Yeah, so maybe let's start with defining what then these rental or long-term, mid-term, and short-term rentals are. You have long-term contracts or rentals, which are usually contracts that have a minimum of 1 year and maximum of 5 years. For companies, it could be 7 years or 10 years, but normally with people, that is then up to 5 years. Then you have the midterm contracts, which are usually from 1 month until 11 months or 12 months, just before less than 1 year. And you have the short-term contracts, which are from 1 day, and you can also rent for a longer period, but they allow you to rent for 1 day, and these are the tourist licenses. What are the differences? One of the biggest difference is that each of these rental strategies have kind of the impact on, or it has a different impact on labor intensity. So, for example, the long-term contracts have almost no rotations. So you just have to sometimes fix, or sometimes if a tenant is asking you something, you would need to reply to it, or maybe some small fixes in the apartment need to be done, but it's very low maintenance, or very low contact moment with the tenant. So that is normally where you earn less, but you also have less things or work that you will need to put in. So for a lot of people that are more senior in their investment career, they prefer this because they are not doing it for the highest cash flow or return from that one property. They look at the whole portfolio, and they would rather have less hassle and have less income, or the less potential income from the property, than needing to do everything. Midterm is then per month or until 11 months. So that means that renters can come in every month, or for example, what we have a lot of times it's per month in the summer periods, but then during the year we try to lock in that it's per trimester. For example, from September until January until June, and then you have July and August. That is already more labor intensive because there's more rotations. If then with every check-in, people have questions, for example, the Wi-Fi, how the apartment works, small things, because they're coming in a room that sometimes one day somebody's moving out and the next day somebody's moving in. So it's just more friction with things that are happening. Now, these could be whole apartments, or these could be room rentals. And especially with room rentals, there's even more work or more hassle, because if you're living with other people in an apartment, then one person is making more noise than the other, or the other person is not really cleaning up the dishes after making food, right? Midterm. So it's more intensive in terms of how much work is needed. So also if you then work, I will get to that in a bit. And then short term is per day. So the amount of check-ins, check-outs is just constantly. And with more check-in, check-outs, it also means with more friction that could happen with the people that are entering the apartment. But that also means that with short term, normally you earn the highest rental yield. So for a lot of people in the beginning of their investment career, like for example, for me the last years, I'm trying to get these properties, because with every property I can earn the most if you compare it with the other properties. Now with time, I probably will go towards the residential properties, as what I've been just explaining. Now, I was already referring to the amount of work that needs to be put in. Yes, it's true that there need to be more work for the short term or midterm, but a lot of people, especially international clients, we are linking them with property managers that take out all the things. They take care of the cleaning, the maintenance, customer service, any complaints. So you'll pay them a certain amount. So you'll pay them a certain amount for their work. So for example, with the long-term contract, it's around 5 to 10%. For midterm, it's around 15%. And for short-term, it's between 20 and 25. But that isn't including everything. So you would not have to do or think about anything happening besides it. You only are just getting then a platform or a website that is saying the occupancy, the prices. And so it's not that bad of a deal, because you would not look or think about it too much, because someone is taking care of your property.
Yeah, that is of course going to impact your final return on investment, so worth keeping in mind. But yeah, definitely probably a lot more hands-off than, trying to manage it yourself. Granted, you'll still probably need some communication with the property manager as well.
True.
Yeah. So how might someone decide what is right for them in terms of what approach to take to renting out a property?
Yeah, so really just how much you would like to, well, first, if the most important reason for you is cash flow or rental yield, or better said, the amount of money that you can earn every month that you can put in your pocket, or are you doing it for capital appreciation? Now, most people will say is that for the rental yield because they want to rent it out to earn something from it. And if then there's capital appreciation, that is just a nice given because, well, in normal situations, there's always capital appreciation. Maybe in a very down market or crisis, the price go down, but especially in bigger markets, bigger cities, the price will go up afterwards. Then if it's the monthly cash flow, then is also your question how much you would like to earn with it, right? Like I've just been explaining. Is that the most? Are you in the beginning of your career? Or is that less and less hassle because you just want to get the money and you're not looking forward, or you don't need to get the highest or the maximum amount from it because you already have a portfolio. So it depends a little bit what your strategy is. Now, if you're looking at the amount of work that needs to be put in, like I just already mentioned, if you work with a property manager, you don't need to look or think about the things anyways. But I would say, okay, what is your objective and how much you would like to earn with it? That is normally giving you a good direction what you search for.
Okay, great. Yeah, nicely summarized. So, Erwin, to bring this all together, I think from your perspective, you see Spain still as a good place to invest in property. What would be your top tips to someone who is seriously considering getting into that? And maybe as well, how could you and MyBlueBricks help them with that?
Yeah, so the first most easy and accessible way to get into the Spanish property market is by having a look at the biggest platform out there, which is idealista.com. And there you can just really easily search for specific markets, for the biggest cities. But also what I then normally tend to do is when I begin with mentoring people that are searching for property is use Idealista also in your advantage, but also by understanding the market. As for example, when you then search for a market, you can also go to all the properties that are for sale or all the properties that are for rentals. And you scroll down all the way to the bottom, and then there they will show you what the average square meter price of properties in that specific area are. Now, because the square meter price is very important, because square meter price is your direction or your guideline, how much you would pay for normal property in a certain area. Now, if you know that, you can also go and search for the more cheapest properties in a certain area. And you can go to a cheap property, and if it needs renovation, you can also renovate it, keep it for yourself, or just then, sell it after. But I think that is and it's the same for the rentals. If you're searching for a property, also have a look there because Idealista is just giving you all the information. And by the way, they also have some good data analytics features now lately that they've been putting in, which you can also do some good analysis of a specific market. So I would say that. And then at one point when you have made the decision about wanting to buy a property or do a project in Spain, is think a lot about if you want to do it yourself or if you want to partner with someone else. That if you have the right knowledge and experience, I would by all means just go for it. But if it's your first or your second property and you want to go more complex, I think it's just good to also talk with people that know what they're doing. And we have been doing it for the last 10 years. So I think it's then worth to just ask for a second opinion for our side. That would just give you a little bit of a guideline where to go to, what to do best, because you don't want to come to Spain and then lose a lot of money. And with that, just make it also a negative experience for what can be very beautiful, because real estate can be very cool. But you can also, if you not do it right, you can also lose some money.
Yeah, it's been described as a double-edged sword by some people that I
Exactly.
watch. So very important to get it right and do it right. So yeah, great tips there, Erwin. Thank you for your time and for sharing your perspective. Reminder, so if you are interested in working with Erwin and MyBlueBricks, do check out the link in the video description, guys.
Nice. Yeah, very much. Very cool. Also, thanks for the opportunity to talk with you, Johnny. And it was really nice to share some things about what we're doing and about the Spanish market.
Alright guys, I hope you enjoyed that video and found it informative. Leave a comment and let me know, are you thinking of buying a property in Spain or investing in property in Spain, and what area of the country are you looking at? And if you like this content and you want to see more about life in Spain and buying a property, then be sure to check out these two videos here. Till next time, I'll see you on the next one, and let's get this money.